All right, good afternoon, everyone. It is now 1 o'clock on Wednesday, February 24th, and we're going to try something different. We want to talk a little bit about the stock market and what has happened over the past almost month now. Back on January 27th, there was a run up with some stocks, specifically GameStop, where Elon Musk called it Game Stunk. Stunk, not really stunk. And at that time, Robinhood, the trading app, did not have the liquidity or, the shares available for the run-up. And it wasn't just GameStop. It was AMC. It was COS. Yep. It was Naked Brands. Yep,
it's a couple.
Yeah, so there were a few of them. And what Robinhood did, and also TD Ameritrade, and I think even Schwab and E-Trade, they put stops on it to where you couldn't buy it anymore, but you could sell it. And in some cases, they were selling stocks right out from under retail investors. A retail investor is someone like me and Cynthia. We get to buy generally between 9:30 and 4, buy and sell. Mm-hmm. So much, and you know it drives you nuts. Mm-hmm. So much activity happens
after hours.
Or pre-market.
Yeah.
Now, during that time, Dave Portnoy of Barstool Sports.
Robinhood is dead. Robinhood's only, like at this point, if I worked at Robinhood, I'd be like, I have two options. And then up in handcuffs in prison, or I'm just going to go bankrupt, but I'm not going to end up in prison.
But he was screaming at Vlad, saying, no, if this is a free market, we're allowed to trade. And you have to allow us to buy shares of companies that we believe in, regardless what the professional investor calls a good stock. If a retail investor likes that stock, who's to say that retail investor can't buy the stock? But what they did was they put a stop on any purchases of that stock and allowed the sell side to go. So what happened? The stock was going up very fast.
Skyrocketed.
And then crashed. Yeah. And I'll show you some examples of that now. Now, before I do that, is there anything you want to add to the beginning of this?
No, I think that was a good intro.
Okay.
To this fiasco that's going on
in the free market.
In the free market.
Right. Okay, so I'm going to bring up a window. This is the NASDAQ.com website. And if you look at this chart, on the 27th, you can see that spike where it went up. Okay, so, let's say on the 26th, it looks like it closed at 10. Mm-hmm. And the 27th, it closed at 58. Okay, that's COS. Now, if I go and find GameStop, what was it, GME? Okay, and you look at that a month ago, same thing. By the 26th, it was 147. On the 27th, it was 347. Okay? Now, this was driven by the Reddit Wall Street Bets crew and retail investors, those that can purchase or sell, buy or sell their stock during normal trading hours. The reason why they said they stopped the purchasing is because they ran out of liquidity. Either they didn't have the stock to trade. I don't really understand. I can't wait for comments. Please correct me on this. But in essence, you couldn't buy it anymore.
Right.
Okay. There's a few more. I'll try one more. Let's see.
AMC, right?
AMC was, AMC. I was going to do Naked Brands, but AMC is a good one because that was big then. I will bring up Naked Brands because I know that Dave Portnoy mentioned that as well. Same thing, right? 496 closed at 19. Okay, that day. Now, this is because they stopped allowing it to trade.
Right.
You can see what happened after that. Look at the 28th. They stopped allowing it to trade on the buy side. So, let's fast forward. I won't even show anymore. We can go back, but let's fast forward to yesterday. February 23rd, 2021. Okay, I'm going to bring something else up. These are a series of charts, and I will zoom in on them. These are a series of charts I pulled off of my watch list. And they include Tesla, NIO, Fuel Cell Energy, you could see them, Advanced Micro, etc. Now, a lot of them are NASDAQ stocks, but Trinity Industries, if I'm not mistaken, is actually you can actually confirm this, Trinity is actually a New York Stock Exchange. Home Depot, I think it's New York Stock Exchange. But the issue here is that these stocks have all fallen at a quick spike at the same time yesterday morning.
Yeah.
At
New York
open.
Stock Exchange.
Exactly.
Home Depot.
Right.
What was the other one?
You could look at Trinity, TRN. Okay. So when you look at this, and I don't know if you can see probably can or cannot see my mouse maybe, but that dip occurs here, here, and these are stocks across many sectors. Yes, there's a lot of technical, NASDAQ type stocks. Look at Nanogenomics, Apple, Grand Terra, which is in penny stock range, it's 89 cents, but it's one of those Reddit stocks, Wall Street bet type stocks. Home Depot and Trinity Industries. Every one of them crashed or went down, corrected at the same time. So, I mean, Sid, do you believe that that's retail investors making it crash like that?
Absolutely not.
Oh.
No, that just doesn't happen.
But from the retail side,
Right.
across multiple sectors.
This is intentional, clearly.
This is intentional by the institutional holders, the professional investor class, perhaps politicians. I'm not going to get political. Hedge funds. It is a coordinated manipulation of the stock market. Now, why would they do this? Well, I could tell you that of all the stocks I brought up, for instance, Tesla and NIO. Tesla, I mean, there are people called Tesla millionaires now. Mm-hmm. Because they stayed in many years ago. Now, Tesla was a shorted stock. And if you don't know what shorting a stock is, you should look it up. I'm not going to go into it here. But Tesla has been shorted like crazy. And so what happens out on the message boards, on Twitter, etc., people bash Tesla. It's going to tank. It's going to go down. It's going to be horrible. And they're beating it up. It starts to go down. It's been going down for 5 days. And every one of these stocks, the trajectory, exactly the same.
Yeah.
So it's not just Tesla. It is a coordinated effort to get shares out of people's hands and get them into the investor class's hands. We know that ARK Investments, that Kathy Wood, you were just reading that.
Yeah. She
bought a
millions of shares
of Tesla.
of Tesla.
But why would they buy it? Why would Kathy Wood buy it at $880 a share? They wouldn't.
No.
It was reaching a carrying capacity for that stock at that point. And for investors to actually get physical shares, they needed to extract them from others. So how do they do that? They coordinate the price down.
Right.
And what does that trigger? It triggers margin holders. Mm-hmm. Yeah, margin holders, retail investors. Margin is borrowing money with your broker to buy shares.
Yep.
And when they could drive it down to a certain price, they drive it down to make sure that margin call gets hit. And they know what that margin call is. They know where it is because they've coordinated with the brokerage houses. So, yada, yada, yada. I'm actually looking at the camera and they can't see me, but that's okay. So, looking at us, what do? There is nothing you can do about this. This is heavily regulated and controlled by the political and professional investor class. But I fear that the millennial generation who bought into Robinhood and bought into that trading platform that's free were screwed. They were taken advantage of. On one side, when the retail investors were making it go up, they stopped trading because they were heavily shorted stocks by the investor class. But when it goes down, Dave Portnoy yesterday on Twitter, he put out a video that he started yelling.
Stop the stock market, only let people buy. Oh, because they're making money now. When Vlad makes money and the hedge funds make money and the shorts make money, everyone else can lose unlimited. That's how it goes.
He's yelling at Vlad, the owner of Robinhood. Why don't you stop the sell side and only allow the buy side? I thought this was a free market, Vlad. I mean, there's something about it. So you have to be careful. I mean, what advice would you give to investors?
Don't buy on margin.
That's a good one. That's a very good one.
Yeah.
Please invest.
Invest what you have. Don't go into debt to invest, because this fluctuates so much. It's a risk. It's a huge risk.
Right. This is not. When this happens, when you see that,
it's obvious.
it's obvious.
Right.
A retail investor does not send this down across the market sector. So, one. Now this is not. We're not professional investors. We're not trying to give you advice as professional investors, okay, or as advisors. We're just retail investors making a commentary.
Yeah.
One, we suggest don't buy on margin. Only invest what you can afford to invest in. That's one. I think the second one is something that we have talked about, which is when do you sell?
Yeah, when do you sell? It seems to be that every time I sell and you sell, the prices go up.
Right afterward. It just seems like it goes immediately. Right? They have this down to a science.
Yeah. I've never sold something where it goes down. Never.
Right. Once you sell and then it goes down. No. Every time you sell, it eventually goes up. Now, one of the things that is constantly screamed about on Reddit, Twitter, and other platforms is hold your stock. If you believe in the company and you didn't invest more than you could afford, you hold that stock because you believe in the company.
Yeah.
Now, this is not investment advice. This is just a retail investor giving an opinion. I have to say that because God knows what the SEC would do to me. If someone says, "I listen to Dan," listen. The point is, you invest in a company you believe in that has good product, that has good potential. And if you believe that GameStop had good potential to become something more, invest in it. But if you did not believe in that, don't invest in it, and don't buy on margin. So, listen, you young investors, Cynthia's younger than I am. I've been investing longer. I've lost more money than her over time. And I'm not even saying she lost money. I'm just saying that it is a risk.
Yeah, it's not for the faint of heart. Dealing with this is like, every day, but it is fun. I do have a lot of fun with it. You too, right?
Of course.
I mean, otherwise we wouldn't be doing it. It's a thrill. You lose some, you win some, and it's great to win.
But that is true.
Yeah.
But just know, this is not a true free market.
Exactly.
You have attacks coming from institutional investors, holders, brokerage houses. You got manipulating this, market makers, as they call them, hedge funds, outside countries, also.
Right.
That don't have our best interest in mind. They're attacking this. Okay? And the rules are not set up for a retail investor. They're set up for those that give their money to a professional investor, and the professional investor gives you your 8% a year. If you want more than 8%, you have to do something else. So that's my advice.
Yeah.
Anything else to take us out of here?
No.
Okay. All right. Well, there you go.
Yeah.
Just remember, this does not happen by chance. Take care, everybody. Be smart in investing.
Yes.
We love you all. And later.